Get the federal perspective on mortgage fraud, and joining me is Special Agent Mike Rawlins from the FBI. Welcome.
Thank you very much for having me.
I understand you spent 10 years in Southern California investigating mortgage fraud, been in Las Vegas for about a year. How do the two cities compare?
They're rather comparable. I thought when I was working in Southern California that I was at ground zero on the mortgage fraud problem. And it wasn't until I came here to Las Vegas that I realized that Las Vegas per capita, I believe, has even a worse problem than Southern California. And in fact, can't imagine a state that has a higher incidence of mortgage fraud than Las Vegas.
And what types of mortgage fraud are you honing in on?
In the FBI, we primarily work fraud for profit as opposed to fraud for housing. And I'll give you just a quick example of each one. A fraud for housing would be an individual who is attempting to purchase a property and can't legitimately qualify for the loan. And so he or she has to inflate income or something along those lines to qualify for the loan. That typically, though that's a fraud, that's typically would not rise to the level of federal involvement. However, we typically in the FBI investigate the real estate insiders, the professionals who are engaged in fraud schemes in order to steal money from lenders, lending institutions and banks.
And how are they doing that?
There's a variety of different ways that they're engaging in those frauds. The common scheme that we're investigating at the FBI involves transactions in which individuals are purchasing properties at inflated values with the understanding that the difference between what the seller wants to get for the property versus what the ultimate purchase price is kicked back to the buyer at the close of escrow. We call those cash back at closing deals. And I'll give you just a quick example of what that is. Let's say you have a property for sale for $500,000. I offer you $600,000 with the understanding that that $100,000 difference is given back to me at the close of escrow. And that's the typical fraud that we would investigate.
So you're making, what, $100,000 on each property?
Exactly. Exactly. And if the fraudsters would limit their activity to that one transaction, we would not be in the problem that we're in today. However, what happened is these different real estate professionals, and I use that term rather loosely, realized the ease with which they could steal that money, that they could get that $100,000. So they took it to the next level. They would go and recruit friends and family members and associates to be straw buyers. And the straw buyer is nothing more than an individual who sells his or her credit for a price in order to purchase a piece of property. So I, as a real estate professional, would recruit you to purchase as many properties as possible. For every property that you purchased, I could make $100,000 and maybe pay you $5,000 for each one of those properties.
So what were the people at the top making? $100,000, $500,000?
In many cases, they were pulling out $100,000 for each property that they purchased. And with respect to you, the example that I just gave, I would put you in as many properties as I possibly could. I have instances in which a straw borrower making $30,000 a year purchased over a dozen properties, incurring $5 to $6 million in mortgage debt, even though they were only making $30,000 a year. Now, the understanding is that once I have all my money on the front end of the deal, I'm not going to make my mortgage payments. The property is going to go back to the bank, and the bank in turn will sustain huge losses.
So do you think that's where many of the foreclosures in the Valley, do you have a rough estimate of how much this contributed to the problem? Any way to quantify it?
I don't think I can quantify it in those terms, though I do know, being at ground zero here and working in the trenches for the time that I have, that the mortgage fraud has had a deleterious effect on the general economy and the real estate market in total. So it's been a very negative impact.
You have a mortgage task force. We're going to give people a phone number. What kind of calls are you looking for? In other words, you get thousands of calls to your mortgage hotline. You can't solve them all, so give me a brief rundown of why people should call you versus another agency.
Certainly. We are looking once again for the systemic fraud involving the real estate professionals who are stealing money. I wish we had the resources to go and address every complaint that we get on the task force, on the hotline, but we just don't. So those instances in which there's a single incident where someone's loan terms changed, those are not the cases that we're going to be able to really pursue. Once again, we're looking for the more systemic types of fraud that involve real estate professionals and lots of transactions, lots of loss. and those would be the ones that we would pursue.
All right, thank you very much, Special Agent Mike Rawlins, for joining us. And you heard, if you have that type of call, I urge you to call the Mortgage Fraud Hotline at 584-5555. One of the best resources for facing the mortgage crisis is Nevada 211. Jay Jones has more on how 211 can help you and your family.
Do you currently have any income coming into the household right now?
In a nondescript office building on East Flamingo, the operators of Nevada 211 answer the phones, providing referrals to callers in need of social service assistance.
It's actually on College Drive. It's 700 College Drive, room 122.
Nevada 211 has been a vital resource for several years, but until recently, most of the callers were people already initiated into what might be called the welfare system. That is no longer the case.
Okay. And that's for rental assistance, right? Okay.
These days, the operators are dealing in ever-increasing numbers with what they call newbies, people who are down on their luck for the first time in their lives.
It's the first time individuals that are needing services. They do not know where to go. They've never been in this position. And those are the individuals that we're receiving a lot of calls. How do I feed my family? How do I pay my power bill? I'm going to be evicted from my apartment. I rented a house, didn't know that it was being foreclosed on. Those types of calls.
And what zip code are you in, Frederick?
And say, I need to know how I can stop my home from being foreclosed on. So then when the operator is talking and she's getting more information, oh, you just lost your job? And so then she finds out they lost their job, their home is in foreclosure. So there's a whole bunch of issues now. It's not just what the first call came in, but this person doesn't know how to ask.
Counselors have been brought in for emotional support, but more importantly to teach the call takers how to cope with the difficult and growing volume of calls, now at around 5,000 a month.
Okay, thank you, bye-bye.
Jay Jones, Recession Rx.